going to let you into the secret of options. Implied vol isn't really about vol. Implied vol is really showing you the demand and supply for different options at different maturities and at different strikes. And because if you think about it, when does someone really want protection? When do they want an option? It's when they're scared. And you'll see the highest vol will be where the strikes are on or the put strikes a little way out of the money, or sometimes deep out of the money. You'll see the most vol, which also might make that the most attractive thing to sell, albeit the riskiest thing to sell. So what we call that, the option surface. So Bloomberg has a nice screen, shows us all the implied vols, different maturities at different deltas. Visually, this is just a picture I got off Investopedia, but it kind of gives you the idea that you get this shape, and it's a 3D shape. It's implied vol by strike, by maturity. It is important to pick the right places on this curve. I think that's something that people don't realize, is that vol, used to price options, is not some factual number. It's the lever that option traders use to trade, and they'll trade and quote spreads in terms of vols. So this is where, when you trade options, it pays to understand. You could have the right idea on what the risk in the market is, but if the market is already pricing that as the riskiest thing, or as not the riskiest thing, basically if the market agrees with you, you probably don't have any edge. And this is why options are so hard to trade, and why there's so little edge in them for the average investor, is simply because they don't have the insights and the clarity on that demand and supply and the ability to trade that implied vol.